Hello everyone, here are the latest market news on April the 24th, 2020. Global shares fall, oil continues to rebound. Global share markets fell on Friday, driven by doubts about progress in the development of drugs to treat COVID-19 and new evidence of U.S. economic damage caused by the coronavirus pandemic. MSCI's broadest index of Asia-Pacific shares outside Japan declined 0.4%, while Japan's Nikkei stock index lost 0.84% amid lingering concern about the spread of the infections before the Golden Week public holidays. Shares in China, where the coronavirus first emerged late last year, fell 0.79%. In Europe, Euro Stoxx 50 futures were down 2.23%, German DAX futures slipped 2.19%, and FTSE futures dropped 1.36%. U.S. stock futures, the S&P 500 E-minis, tumbled 0.56%. The S&P 500 and the Nasdaq turned negative at the close of Thursday after a report that Gilead Sciences Inc's antiviral drug remdesivir had failed to help severely ill COVID-19 patients in its first clinical trial. Meanwhile, oil market continued to recover, with U.S. crude rose 4.85% to $17.30 a barrel, while Brent crude futures climbed 3.98% to $22.18 per barrel, as some oil producers said they will bring forward output cuts. Nestle shows strong sales due to frozen food. The world's food giant Nestle SA reported its fastest sales growth in almost 5 years as consumers started to buy much more frozen food, boosting brands that have faltered in recent years such as Stouffer's and Hot Pockets. The company reported the first quarter sales rose 4.3%, surpassing analyst expectation of a 3% increase. Nestle maintained its forecast for an improvement in sales growth this year, saying there is no clear picture of whole COVID-19 impact. The firm has been aiming toward at least single-digit growth in the next 2 years. Meantime, the world's largest food company is trying to help some of its hardest-hit customers, which are restaurants and caterers that have been forced to close. Nestle is investing 500 million francs in a plan that involves extending payment terms, suspending rental fees for coffee machines, and offering free products. Fed's balance sheet is close to 30% of U.S. economy. The U.S. Federal Reserve's balance sheet increased to a record $6.62 trillion this week as the central bank used its nearly unlimited buying power to purchase assets to keep markets functioning amid an economic slump due to the coronavirus pandemic. The Fed's balance sheet as on Wednesday rose about $200 billion from $6.42 trillion a week earlier. It's equivalent to roughly 30% of the size of the U.S. economy before the crisis and will certainly grow larger in the weeks ahead as the central bank keeps piling on assets and the economy drops. The Federal Reserve continued to buy Treasury securities, mortgage bonds, and other assets, with banks' holdings of mortgage-backed securities rising to $1.62 trillion from $1.57 trillion, and Treasury holdings rose to $3.91 trillion from $3.79 trillion. Italian oil company Eni reports 94% drop in profit. Eni S.p.A., an Italian multinational oil and gas company, reported a 94% drop in first quarter profit and cut its production forecast for the year. The large decline in earnings provides signals for the rest of the industry, including BP plc and ExxonMobil Corp, with the worst impact of oil's historic plunge likely in the coming quarters. Investors are focused on how the companies handle one of the most turbulent periods in recent memory. Eni said adjusted net income was €59 million, $63.5 million in the quarter compared with €992 million a year earlier. Company's oil production this year is between 1.75 million and 1.8 million barrels per day, lower than the previous forecast of as much as 1.84 million. In addition, Italian firm in March slashed spending plans and cancelled a €400 million share buyback. On Friday, company said it deepened planned capital expenditure cuts further, forecasting a reduction of €2.3 billion this year.